The borrowing rates for AMC stock are exploding today, and that's what we need to talk about mainly here in this video, and exactly what's going on in the markets, because we were negative on the S&P and the NASDAQ to start off the day, and now we are over 2.5% positive on the NASDAQ. What in the world is going on? AMC stock is only up about 2.5%. You are again seeing this ping pong game between quote-unquote meme stocks and retail stocks that we need to talk about, because I know a lot of people are over here concerned about the executive orders. Something is going to happen, nothing's going to happen. There's a lot of thoughts out there, and really the same thing applies from what I've been saying over the past week or two. This has certainly not changed anything, but seeing the cost to borrow rates exploding like they are today is certainly a very bullish sign. So we're going to dive into all of this key information. If you guys find value out of it, hit the like button and subscribe to the channel. Source comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time as well, link down below in the pinned comment, and get yourself those free stocks with Webull, Moomoo, and Public. You can't go wrong by doing that. It is literally free money. Now, first things first, what is going on today? Well, I kind of want to talk about the markets, the broad markets. We're going to get into the Ortex data. That's very, very exciting. You guys will just have to stay tuned for just a second, because there was a lot that actually happened today. And I don't know how this is seen as like a bullish thing, but believe it or not, it's being seen as somewhat bullish. You have Fed Vice Chair Lael Brainard says it's very hard to see the case for the Fed pausing rate hikes. Federal Reserve Vice Chair Lael Brainard told CNBC on Thursday that she doesn't see the central bank taking a break anytime soon from its rate hiking cycle. Quote, "We've still got a lot of work to do to get inflation down to our 2% target," she said. Despite worries over inflation, Brainard expressed confidence otherwise in the economy. So that's bullish. I mean, expressing confidence is a good thing. I mean, that's definitely what you want to see, but the actions have to match up with that, and it's obvious the markets are disagreeing with the Fed. The markets know growth is slowing down. Analysts still have a 10% growth rate for earnings on the S&P 500, and that's just a recipe for disaster, because that is not going to happen. And you do have the markets firmly pricing in a recession, as oil has been over $100 a barrel for the last 5 months. Every single time in history oil has went over $100 per barrel, you have seen a recession up to 12 months later. So it's coming. So it's kind of one of those weird things where, who do you believe? Do you believe the Fed? Do you believe the markets? Who knows? Obviously, the markets will be right in the end. They always are. But here's this bit of news. We did get some economic data. It says U.S. April durable good orders increased 0.5%. Estimate was 0.4%. So that's good. It's not huge, but it's definitely better than having a miss, right? So it did... This did come out well, durable goods. U.S. April factory orders rise 0.3% from a month ago. U.S. April capital goods new orders, non-defense ex-air rise 0.4%. U.S. April durable orders, excluding trans, rise 0.4%, estimate 0.3%. So that is also good as well. I think the most bullish thing on the day, though, is this. It says, OPEC Plus raises output ahead of time to meet growing demand. Essentially, OPEC has its barrels per day pegged at about 440,000 barrels per day of oil that they let out of the ground and let into the open markets. Well, now they are raising that to over 600,000 very, very soon. So that should be seen as a bullish thing, and that's what the markets are doing. They're looking at this and saying, hey, the price of oil should be going down here in the near-term future. But if you look at the price of oil today, it's actually going up, right? The price of oil is up about 1.3% for Western oil. Brent is up about 1.16%. Natural gas down 1.29%. So you're definitely seeing that bullish enthusiasm in the markets, but it's not actually doing anything for the oil markets as of right now. But the price of oil is indicative of a recession. If the price of oil were to plummet tomorrow or next month, then your odds of a recession will go down dramatically, like very, very dramatically. So that's definitely good. But Brainard says market pricing for 50 basis points in June, July reasonable. Brainard, don't have a clear sense on where we'll be in September. says very hard to see case for pause in September. Brainerd says Fed tightening policy via both rates and balance sheet. Brainerd watching home sales very closely, which have softened. Developments in housing reflect impact of tightening. And obviously there's been a big boost in the interest rates. Like the interest rates, for comparison, have risen faster now since the Civil War. So it's definitely a very historical time nonetheless for the real estate market. Now, there was also some quotes about they're not sure if they're going to actually pause or reduce their rate hikes by September, but they are still putting that doubt out there that, hey, they might. So that could also be seen as a potentially bullish thing, and that's kind of the consensus. We did have another Fed speaker, I believe Fed Fed Mester. It says Fed can speed up or slow down in September, depends on inflation. Mester wants several months of sustained downward inflation, and that's exactly what we've been seeing in core CPI. Is inflation is going down. It's not going down that fast, but it's still going down. The overall CPI, yeah, it's went down a little bit, but food and energy is so much of that weighting that unless that goes down, you're really not going to see your CPI come down in a big way. Core CPI has been coming down, though, so that is very good. Fedmester also says the risk of recession has risen, but a good case can be made that a sharp slowdown can be avoided. He adds that he supports 50 basis points at the next 2 meetings. So, putting that doubt out there for September, and that's definitely a good thing, right? If they slow down, if the Fed does pivot around September, that's going to be very bullish for long duration assets. And the quite honest, the truth here is the Fed is just trying to get rates up. So when we do go into recession, they have room to cut rates. That's it. It really has nothing to do with CPI at this point. If inflation came down tomorrow, they would still be raising rates to get the interest rate at least up to 3 to 4 to 5% still, because when a recession comes, they have to be able to cut rates. And that's just the honest truth that I don't think a lot of people want to hear or a lot of people want to talk about. You're definitely not seeing financial media talking about this because who knows why. It seems like Econ 101, right? When you go into recession, the last thing you want is low interest rates and higher than normal inflation, right? You don't want stagflation with low interest rates. If you do go into recession, you at least, at the very minimum, want the federal funds rate over 3%, so the Fed can come in and give out that cheap money again. So long story short, that is what is going on here in the marketplace. We do have some economic data that does come out tomorrow as well, and that could be very important. Let's go ahead and look for Friday. For tomorrow, we do have unemployment rate for May at 8:30 in the morning. Eastern Standard Time, and then 8:30 in the morning as well. You have non-farm payrolls for May. Participation rate, average hourly earnings, non-farm payrolls, manufacturing payrolls, government payrolls, and then you do have ISM non-manufacturing PMI. All of these going to be very important. And then you do have another Fed Brainerd speech as well that does happen tomorrow at 10:30 in the morning. So you do have some data coming out for tomorrow that could be very important. You do also have the executive order that goes into effect tomorrow as well. But I do want to make it very, very clear to everyone that is watching this video. What happened last time, the executive order actually went into effect on May 27th, right? And you had a 35.5% positive day. Well, the next day you dropped 1.5%. The following day after that, you gained 22.66%. The next day you gained 95.22%. And then the day after, June 2nd, so June 3rd, the executive order got retracted and the stock fell about 18%, right? So I think the real question here is, when the executive order goes into effect tomorrow, will it stay in effect next week as well? And I think that's where you could potentially see this big rally like I've been talking about. And that's why the cost of borrow rates, in my personal opinion, are going up so much here today. Let's go ahead and refresh this. Cost of borrow minimum now at 5.1%. Cost to borrow average at 12.02%. Cost to borrow max at about 20%. Now, what is this? What is the cost to borrow? Why is that so important and can be so indicative of a big move potentially to come? Well, if you thought the stock was going to move, if you are a money manager or you own AMC or you're willing to lend it out, you want to at least get a rate of which you think the stock could move at, or somewhat comparable, right? So if you think the stock could move up 20% tomorrow, you at least want 12%, right? Cost bar average 12%, cool, you'll take that. Or like the cost bar max is sitting at about 20%, right? So if you think the stock is going to make a bigger move than not, the cost to borrow rates should be higher, and that's exactly what is happening today. 100% share utilization, days to cover sitting at 3.42. Free flow out on loan is sitting at 34.23. Absolutely insane compared to 23.07% short interest of free float, 119 million shares that are sold short. Borrowed shares for the day, 2.53 million. Return shares of 811.94 thousand. So you're definitely seeing a lot more borrowed shares today, for sure, than return shares, and the short interest continuing to climb. Like I said, days to cover sitting at 3.5 as well. So all of the data points that you could potentially look at look a lot better now than they did during the January or the June rally. The days to cover, the just everything about it, right? Look at market conditions where they are at. You're going to be seeing some margin calls, and we got another video to make here shortly, talking about Tiger Global, which is down 54% to start 2022. Just massive losses across the board. And if they're down 54%, you got to imagine a lot of other hedge funds are down similar amounts. So that is that. As far as the option activity, you're looking at 13 orders totaling 1.47 million, positive order value of 57%. So again, looking pretty good right there as well. So that is pretty much going to be all for this video. We're going to clarify exactly, what I expect to happen tomorrow and all of that in the next video, and really why I'm so bullish, and I think it's going to be good for a lot of people to hear that. But we are now above $13 again, up about 3%. So 13 is the key level you want to stay above, and then ultimately, I think it'll be pretty easy to break out above 15 again, and then above the 50 and 100-day moving averages. The RSI is at 47.40, so pretty neutral overall, a little bit on the oversold side. The MACD is pretty bullish right now, and it's been pretty bullish for a decent amount of time here. So looking pretty good in that regard, looking like we did hit that bottom at $9.70 per share, and it's probably going to be straight up from here, in my personal opinion. Obviously, I'm not a financial advisor. Come to your own conclusions. Do what you guys want to do. Buy, hold, sell. I don't care what you do, but nonetheless, that's the information that you guys need to know. Get yourself those free stocks down below in the description. If you guys want to come trade with me live in real time, link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.